Morning, everyone. It's Monday, the 19th of January 2015. Welcome. Screen share is active, mic is on. So hopefully you should all be receiving a very clear signal. Just a reminder, it's a live broadcast. So if you have other programs which require your internet bandwidth, it is worth closing them down in order to prevent disruptions to the reception on this webinar. Okay, folks, so a quick glance at the calendar before we take a look at the charts. We'll be following the usual format that we have in these presentations. Big items on the calendar this week, I think Wednesday and Thursday. On Wednesday, a minor hit with Bank of Japan monetary policy statement and press conference. But later in the day, you've got UK claimant count. That's like the NFP for the pound crosses. And you do get a lot of volatility usually surrounding that event. Also on Wednesday, the Bank of England releases their voting pattern from the last meeting. No one's really expecting much of a change there. So we think it will be held at 207. And if there are any changes in that, that will be a big deal, up or down, right? So the chief economist at the Bank of England's kind of made it quite clear toward the tail end of last year that we shouldn't be expecting any interest rate rises at least until the end of 2015. So if that voting pattern's changing and it's going kind of, 306, and that will raise a heck of a lot of eyebrows, I'm sure, and certainly if it goes the other way. So we expect it to be held, and we'll see how that plays out. The claimant count, that will be, I think, the big one. And Bank of Canada also reports on Wednesday with their latest rate statement, so again, we can expect some volatility on Canadian crosses from that. The big day this week, the bazooka, will be, of course, on Thursday. It's the turn of the European Central Bank. It's the last bank to be reporting this month. And it won't be the minimum bid rate, which will cause the volatility, but the press conference, which tends to follow that around about 1:30 GMT, 2:30 Central European time. They have the press conference, and that has pretty much always been a volatile affair for the euro. A lot of talk in the financial press and media about the potential for €1 trillion of quantitative easing. We're going to have to kind of wait and see what impact that has on the euro overall. Note that she's been falling for the last 3 months, and even this month, she's since the beginning of the year, she's been down at one stage 530 odd pips. Quite a big move there, right? So she could play any way, but the general thinking in the market, and we're not talking technicals here, but the general kind of themes which have kind of come up in the long room at the Financial Times, to say that, well, the expectation is that the market would view quantitative easing as a positive, and people are expecting the euro to appreciate as a result of that. I.e., the market's looking at it like a solution to the eurozone problems, and because it's a solution, they will price in the success of that solution, even though that may be some years down the road, and so people are looking at the euro higher if indeed that kind of policy is announced. Not being a fundamental trader or fundamentalist trader, we've seen the kind of havoc that fundamentalists can wreak. We'll just go by the technicals, and we're going to go by the flow, and I'm not going to try and get ahead of the curve on any ECB announcement, but we'll just look at the price and the direction that the price is taking and continue to trade our standard support and resistance technology. All right, let's hit the charts. So I guess you're all here this week because all of you are still solvent after last week. I hear a lot of brokers have gone under. I know no one's crying any tears for them, but but yeah, heck of a crazy week last week, and we'll take a look at some of those pairs in a while. But first up this morning is the Euro USD. So, what's the story? Morning glory with this instrument from the beginning of the year. So I have the yearly marked up here, and since the beginning of the year, she's been clearly down. She's been down to the tune of about 530 odd pips, and so the issue now becomes from a pure technical perspective, and just to be thinking correctly also is to know that 500 pips, despite the fact that she's done that pretty much every month for the last 3 or 4 months, is that it is still unusual. It is not normal for the instrument to be moving and depreciating 500 pips a month, and it is quite a large move. So, considering that we're in the middle of the month, this is the 19th, we still have two clear trading weeks ahead of us. The idea that I have is that, I suspect that we're going to get a bearish monthly bar at this stage, and I don't have reason for suspecting anything other than that at this stage. And if that's going to happen, maybe the size of that bar will be 500 odd pips, maybe 600 odd pips. All right, maybe we're looking at some kind of extremities on the Swissies right now, but it would be heck of an unusual thing to have 1,000 or 2,000 pip bar on the Euro USD. This book has been rewritten many times, but it would be unusual. So you can't rule out at this stage the scope for a retracement. And so I'm looking at this chart and I'm saying, well, I just want to know where is the resistance that defines the trend right now. I'm still prepared to play the shorts, but I have to mark that level so that I know when to stop playing. And so the area which I'm marking off, I'm just going to drop to an hourly time frame. It becomes a little bit more visible. Is I'm marking off this zone here. So it's being taken something like this. It extends from 1650 up through the 17 price handle, and as far as the last support that was breached, that comes in on a trend wall, something like this. All right, so what I would be saying as far as price expectation is concerned is that so long as price is remaining below the wall, and so long as price is remaining below the cluster, right? So long as it's remaining below that resistance block, I would consider the bears to remain in charge. And from a trade entry perspective, what I'd be looking for is a move up through that block and an hourly candle. And I think that at this stage, you're going to need that kind of confirmation, right? So ordinarily, I'd be quite happy to play that 1700 level quite aggressively. But considering how far she's fallen already, I'm going to exercise a little bit of care. The current move up that we're looking at, I'm seeing that as a near-term retracement, and I want to see signs of failure at near the 1700 price handle. And once I've got that sign of failure, once I've got a bearish bar off of it, I can become a little bit more confident about initiating a short play. Then the next question I hear you ask is, well, what happens if the price doesn't retrace as far as that? And so we do have a plan B, right? If we're getting consolidation up here and then the price drops down through the 1560 price handle, I would be prepared to chase that very cautiously with a stop up above that weekly open, saying, well, maybe we're not going to get a deep retrace. Maybe we've got a very shallow retrace and then a continuation to the downside on this instrument. And that can become cause for taking on a new position or for adding on to existing positions, right? So And the last time we were here, I think it was the 5th of January, and we were talking about initiating shorts up here. And so, if you've still got some of those positions open, I think it would be very much worth looking for further triggers to the downside and to start building something a little bit more significant. A break above the 1700 handle, that would just very much have me seeing a side, right? And if I'm stopped out of a short there, I would call it a day on Euro USD, at least until there was a breakdown below the weekly open, and I could say that the flow is in my favor. And the best way to measure sentiment on an instrument is just to look at the direction of the week and to look at the direction of the month, and that there bees your sentiment, right? That bees your, that is the sentiment on the pair. So in the near term, when it comes to trading, it's just useful to be trading in the direction of the week, particularly when you are looking for a continuation momentum, and that seems to be very much a theme on the euro, on the euro USD. So those are the technical levels defined on that particular instrument. Okay, GBP USD, right? So GBP USD, last week we published in Trade Notes a weekly support wall, right? So this is the weekly, I'm on the daily time frame here, but it's visible on the daily and the weekly, but we're taking the low there and the low here. We've got a support wall. What was interesting about this support wall was when you drop down to the hourly, we had quite a sharp strike off of that wall, right? So that tells us that the wall is significant, and so we highlighted this last week, and what we've said is that so long as the price is actually remaining above the wall, we're prepared to make bullish plays on the instrument. And the trigger for our bullish play on the instrument is anywhere between the 151 price handle, anywhere between the 151 price handle and the wall. So let's just mark the wall in a different color. All right, anywhere between the 51 price handle and the wall. If you're getting price dipping down into that area and then you're getting a bullish bar out of it, what you want to do is to initiate a long trade on the close of the bullish bar, looking for follow through to the upside. And so, and this was our active play last week, and it gave 2 or 3 opportunities off of the 51 handle, even dipped below the 51. But anytime there was a bullish hourly candle, and I'm just going to show you that, right? So anytime you had a bullish hourly candle off of that, it's given follow through to the upside. So we're maintaining that standard, right? We're maintaining that strategy and saying, there's a support which is being established here, and as long as that support is holding and as long as the price is remaining above the wall, then we're quite happy to be looking long on GBP USD, right? But there's a plan B here because it's a support wall, and what that means is that if the price breaches it on a pullback, you're going to get resistance. And if there's a support which is being built here to the 51, maybe she pulls back as deep as at 51 after breaching the wall, you can look for that area to become resistance and follow through to the downside at that stage. All right. If it happens that she breaks down, the wall is holding, and you get something like that at that stage, this is probably going to start looking like a double bottom. All right. And you can get excited about that. But in the near term, we're just excited about bullish hourlies off of that wall, bullish hourlies off of the 51 price handle. We're quite happy chasing those to the upside, and we'll carry on doing that until price action gives us reason to be doing. Otherwise, ordinarily I wouldn't be looking for a 50 to hold more than a 47. I think the 47 on GBP USD is probably more interesting, but she's at a historical level. I say historical level, I hate historical levels, right? It's not a historical level, it's an incident level, right? So, what happened here? What happened here was that the last governor of the Bank of England, and maybe this one has a different view, right? But Governor King, when the price fell down to that 147 handle, and in fact, we should probably look at an exact price on this or something, right? But where is that? 148.20. Yeah, he didn't like it, right, Mr. King, right? He didn't like the pound being that low, and he said something toward the end of, he said something like, "That's far enough." And the moment he said it, I don't know if any of you guys were trading at that time or watching GBP USD at that time, but the moment that he said it, the price just shot from that level, right? And when she pulled back, off she went again. So what I've been wondering is that the floor for the Bank of England still? I mean, okay, that was a couple of years ago, and the governor's changed since then, right? But is that a policy flaw on the pound dollar for the Bank of England? The Bank of England says that they have a habit of not physically intervening in the market, but what if Governor Carney or any other members of his crew start making critical statements at around that time? Want to be on the kind of lookout for that. And certainly if they allow for the price to dip below that without saying anything, maybe that indicates Bank of England policy, right? Maybe that indicates what Bank of England policy is. But certainly we're approaching a key level here, and I'll be on the lookout for spurts in activity on this particular instrument at this stage. Particularly considering since she's fallen from the 172 handle, and we're as good as at 52 now. So 2,000 pips in a straight line over the course of the last few months. Again, maybe some reason why we might expect some retracement, but the price would need to confirm that, the market would need to confirm that. Right now, it's just a little bit of conjecture. What I'm saying is that I'm very, very happy playing longs off of the support wall. So long as the price remains above that, I kind of consider that good to go. She paid pips all last week, and there's no reason why she can't do the same this week. So a nice little bit of fundamentalist ideology mixed in with the technicals there on GBP USD. Right. What else we want to take a look at? USD JPY. All right, USD JPY, another long-term support wall. Right, so we're on the hourly time frame here on this instrument, and so you want to mark the wall. Right, the wall goes something like this, and you also want to mark the cluster, right? And I guess the cluster goes something like this. Okay, so in the first instance, there's a first instance and a second instance here on USD JPY. In the first instance, so long as the price remains above that wall, if you are bullish on USD JPY, or you prefer to maintain your trading strategy in line with the desires of the Bank of Japan, then you would have cause actually for buying anywhere above this wall, looking for the price to eventually move higher. And that would probably be a sensible course of action. My own personal preference at this stage is to look for the instrument to break down a little bit further. And the important issue becomes what is the trigger for the trade going to be, right? So you can have a price expectation, but you also need a trigger. And whilst I'm not prepared right now to be selling, right? Even though technically speaking, I could take the cluster and say, this cluster is a resistance cluster, and I'm going to use that to define the trend. I'm actually concerned by that support wall, and um, which is why I'm saying if you're a buyer and if you're bullish on the instrument, that wall would be the wall that kind of defines the risk. So what I'm looking at is for the price to actually break down, right? And if you can break down through that wall, then that breakdown, I don't know, I might chase the breakdown. I might wait for a pullback and retest and say, okay, look for the follow through after a pullback and retest. But I think that a breach of that wall will open the doors for something, right? And maybe it opens the doors for something big. Maybe not as big as the pound Swissy, but still something significant. And when we're talking significant, there's a long way down here. There's a big kind of area here where the price rallied, and once she enters that area, maybe we open the door to the 110 price handle, right? 109, 110, right? 111, 112. I don't know. Yeah, but I think it will open the door for something, and so it kind of maybe a structural shift has already started happening, or maybe the break of that wall opens the door or confirms that structural shift. So last week we were talking about shorting USD JPY as it broke down through the 118 price handle, and that gave rise to some pretty good trades. She's been bouncing off the 116. That was our target to the downside, and now we're kind of looking for the next move in this and saying there's a support wall here, a breach of that support wall, and you could have much more significant follow through to the downside. And I think you would get good risk definition at that particular wall. It's going to be worth monitoring during the course of the week. The focus, I think, this week seems to be very much on long-term levels, right? So the first couple of weeks of the year, we're looking at a few short-term levels, but now it's very much at long-term levels, and it looks like, as far as targets are concerned, there's everything to play for on these instruments off of these walls. USD JPY, I think it's going to be a good one, very much worth keeping your eyes on that. Okay, let's get excited about the Aussie dollar. Right, so Aussie dollar, there is a resistance wall. I've got it marked like this, right? So just taking the low and trying to explain that there, and trying to explain that there. Take another, you can probably draw another one off of that high too. Maybe something like this, right? So she's been falling, and I don't think that I don't think that the falling element of AUD USD is over just yet. So I'm prepared to play shorts on this instrument, and I have two triggers. If the price moves north and hits the underside of the wall, I will make an attempt on the underside of the wall. It'll be an aggressive attempt at the wall, and those don't usually cost that much to get involved, right? They cost maybe 20, 25 pips, most 30 pips to get involved in that kind of a play aggressively on the underside of that wall, looking for a resumption of the bear move. And in the near term, you probably do well to mark something like that on your chart. And again, I think that a breach of that, so if we get that breached and a pullback to the underside, I think that would make an intraday trigger for a short play on the Aussie dollar. One thing that you ought to note on this is that structure there. And I know a lot of people are going to say, hey, double bottom, right? But it's not unusual to get moves like this, right? Where that double bottom is breached, and the breach of that kind of gives a significant follow through, right? So, if that was a double bottom and if that was going to move higher, I don't know, maybe she should have done it by now. Maybe you'd see a lot more aggressive buying. These are my raw thoughts on the instrument. I want to see a lot more aggressive buying off of it to kind of confirm that this is going to be a H1 or H4 double bottom, right? So maybe it's not. Maybe it's the type that gives you a continuation, and uh, I'm keeping my mind open on that. And so I'm quite happy to carry on looking for short plays on the Aussie dollar. It doesn't matter what the financial press believe the RBA is up to, and it doesn't matter what the fundamentalists think about what data is confirming what. But um, we're just not seeing the momentum. We're just not seeing takeoff from here. The RBA's stated preference for the Aussie dollar is 85, I believe, right? So we're below that, and they're getting more than what they wanted. And they're not moaning about it like they were moaning when the price was up at 110, right? So is there room lower? For now, I'm quite happy to believe so. Yeah, for now, I'm quite happy to believe so, and and so still looking for the shorts. As a general note, she's been in a range here through most of December, and now through most of January, or certainly the first half of January. So, you could look at that two ways and say this is the consolidation phase before the next fall, right? Uh, uh, or you could say, well, maybe that stall signals the end, right? I'm quite happy to believe it's a consolidation fall. It's a consolidation before the next fall, and so I'm going to keep kind of triggering those shorts. The upper wall is a longer term play. The lower wall is a short term intraday play here on the Aussie dollar. Okay, dollar Canadian. It's a bit of a mixed bag when it comes to the dollar. It's a bit of a mixed bag when it comes to the dollar now, especially if you're looking at what happened on the Swissies last week with the USD CHF2, right? A lot of pairs out of kilter, so normal correlations aren't necessarily applying right now, but at some point they will come back into sync. All of these pairs, right? So dollar Canadian. She's up at the 120 price handle, right? Here she's at the 120. And here's the thing about the 120. I know a lot of people like to talk about big round numbers and other BS like that, but I really don't have a thing for big round numbers. What is unusual from back in the day when I used to look at big round numbers and I was taught to believe that they're significant and I tried to trade around them was that I usually ended up discovering that they're not as significant as people actually believe they are, particularly when you're trying to use them for trading. I don't know if anyone else has had similar kind of experience. I find the twos and the threes and the sevens and the eights tend to be a lot more significant. So, the 22 and the 23 is more likely to be significant than the 20. And the 17 and the 18 is more significant than the 20, right? So, so she's here at the 120, and I can imagine a lot of people looking at this and wanting to believe that there will be a huge structural shift off of it. I don't think that the price action is really giving us any indication of that right now. What I'm looking at is a support which was established there, right? So there's a support there around about just above the 119 handle. So we'll call that 119.20 for good measure. See, there's your 20 and there's your 30, right? Even on a micro level. But we've got a support there. And if we're looking at the price action, you can see the kind of support which is being established there. The price broke down through that support, and you've got a bear trap, right? So you've got sellers that are trapped all the way down there. and the price shot back up above it. Right now, ordinarily, when you get this kind of scenario, it's not unusual after a bear trap for the price to give a much more significant follow through to the upside. She might dip again down towards the 1860 price handle. So we're looking at something like this zone here, around about the 1860 price handle. And what I very much suspect is that if that happens and then she takes off again, the break above that 120, you're going to see a very fast move up through it, and that will dash another 200-300 pips to the upside quite comfortably, right? So, long story short, I remain bullish on dollar Canadian just based upon the current price action, even though I'm not sure where I might take my entry, right? Certainly, I would sit up on a break up through 120, and I would suspect that that is going to follow through. And if that is going to follow through, then I might not need a stop of more than 20 pips below the 120 price handle. That's if she breaks up through the 120 now, based upon the current price action. If she dips down to 1860 and then breaks back above the 1900 price handle, 1930 price handle, again, I would start thinking long, right? And I'd start looking for an hourly bar that I could chase to the upside, just an hourly bullish bar. And I'd chase that to the upside, just based upon the current price action. If this is going to go horribly wrong, then next week we're going to come back and the price action is going to look something like this, right? That would be, it's gone horribly wrong. But that hasn't happened yet. So we're just talking on the back of the current price action. There's a bear trap here, and I don't know. I don't think that these guys are going to be forgiven so easily just yet. I very much suspect that we are going to get a little bit more dollar strength this week on this pair, and I'd be looking really to be buying highs, buying rallies, rather than trying to buy dips at this stage, right? So at least that would be in line with the general kind of expectation for the pair, right? So that's the dollar Canadian. Still forecasting a little bit more dollar strength there. Okay. What else have we got to work through? Euro AUD. Right, so again, some long-term focus for the Euro AUD, but there's the support wall. And in fact, if you look closely and you zoom in on this chart, you can see the kiss back that the price did on that wall, right? So I don't know if the price pushes all the way back up there this week or not, but if she does push back there, and it doesn't really matter how hard she hits that wall, I would like to play an aggressive short off of it. All right, I would like to play an aggressive short off of it. And to the downside, you have to keep your eye on that. I think that's important on the downside, that cluster there. It just stands out on the chart, right? It just stands out on the chart. So, if we get a move up to that wall, and this isn't just for this week, right? It's a clean technical chart here. A move up to that wall, you can short it and just look for follow through to the downside. And I'm looking for a retest of the 139 price handle. If 139 happens before that wall, I'd say, oh well. But even in the future, I think that would remain a play if it is retested. And we're asking for quite a lot here. We're asking for the price to rally almost 300 odd pips to allow us to get an entry. But what with ECB on Thursday, why not, right? So I wouldn't write it off. I'd mark the level, I'd keep it marked, and if it happens, it happens. But Euro AED, it is a bit of a clean technical play, and I think it will be good for trade entry and using SNR off of it. Okay, right. So last up this morning, I guess every presentation this morning is going to be looking at what happened with the Swissies last week. Yeah, this is what happened. All right, this is this is what happened. So that's that's a little bit crazy. A little bit crazy. And so what are the price expectations now? I think that would be important. And here I'm just going to kind of outline some general price expectation. I'm not talking about trade entries or anything like that, but first off, it's a flash crash, right? And I know a lot of people were kind of surprised by it last week, although we ended up in a very, very good trade off the back of it. I don't know, I think the Swiss National Bank, they agreed with the analysis that I published last week, and they accepted the short play on the underside of the wall, right? They accepted that, and they accepted it to the tune of about 3,000 odd pips. We were quite happy with the 48 price handle, right? But they thought that the move would have a lot more legs, and they gave it that. But what with it being a flash crash, if ever there was a time to use the term too far too fast, I guess this would be it, right? And I saw this happen a few years ago, a couple of years ago, and in fact every couple of years we see something like this happen. The last big one on pound Swiss was a few years ago. The one that was triggered by Warren Buffett selling some stocks or something, and then the algos took over and did everything else, and it triggered huge crash. And then people talked about why the circuit breakers didn't kick in, and this and that and everything else, right? But what happened that time was that eventually, I say eventually, but pretty soon after, the price started stepping back and retraced the entire move, right? So, whether you're going to start getting involved in a long right now or not, I don't know. Your call, right? But it's not unusual when the price falls like that to get flagging structure off of it. And it doesn't matter if we're talking a fall of 100 pips or we're talking a fall of 1,000 pips or 3,000 pips. The technicals tend to be the same, and they tend to play out something like this. That's how it tends to play out. All right, so maybe she can dip a little bit more, but and then start doing that, right? So that would be my preference. That's what I would be. That's what I would be looking for, and not only did we short last week right up here, but we also started initiating some long plays on the pound Swissy last week too, and picked up a few pips that way. And I'll be looking for those opportunities. To see if we can actually get the instrument retracing a significant portion of that down move, if not the whole of it. And all of the Swissy crosses are looking pretty much the same. So as a general root thought, it would be the same on all of the Swissy pairs, whether you chose to kind of have that thinking of this or on dollar Swiss or on any other pair, right? But that is the overall price structure that I'll be looking from a technical perspective. There is an alternative, right? So sometimes you get something like this happening, right? So, maybe this is the beginning of a new bear move. And after that, you're going to get the momentum following through in a down channel. And I've considered that also, right? So, we're looking at, let's go to the H4 where we have a full bar. There we are, all right? So, maybe you're looking at something like this, all right? And so there's the price falling, and she starts channeling after. But the reason why I'm not giving that full consideration right now is that there's not really enough data, right? There's not really enough data on the available right now to start mapping this kind of move. So, okay, we can have a general expectation. You might say, well, there wasn't enough data for you to look at a complete retracement, but that's based more upon what we've seen happen previously in these scenarios, right? So, we've seen it happen quite often. When you get a flash crash like that, you end up getting a complete retracement of it, and the price just ends up channeling back. But if she's not going to channel back, maybe you get a follow through to the momentum, and the follow through to the momentum will create its own channel. We've had a vertical move. Now we're going to get a diagonal, and would be looking at something like this. So I'm quite happy to be looking for buying opportunities, looking for a reversal. It's not really based at the moment on a strong technical, but once she does start stepping, once you've seen the first part of that move, you're able to forecast the second part of it a lot more comfortably, right? So, pound Swissy, I think I think it'll make a good play, and she seems to be supported off the 28 right now. Dollar Swiss, you've got pretty much a similar story going on here, right? So if we go to the H4, right, again, that is just a massive move, too far, too fast, and ultimately, I don't know. I don't think I'm crazy for expecting a significant retracement of that, and that is what I'll be kind of looking out for this week, and we'll just see how that goes, right? Stick with the lines which we had marked on dollar Canadian and Aussie. Stick with those guys. But as a general move, I don't think I don't think it's a bad idea to have that kind of price expectation. Did anyone get caught on the wrong side of this last week? Is it silence because of shame, or silence because I'm sure somebody did. Yeah, half of the Twitter stream is bankrupt now, right? Yeah, Alperi down. FXCM bailed out $300 million or something they managed to raise from somewhere. A lot of brokers in trouble right now. It'll be maybe pull your money out. Let's have a run on the brokers. Okay, folks, that's the lot from me. Yes, but my broker closed my trade right on my stop. Well, that sounds like a good broker if they close it on your stop. I've heard some terrible tales. Yeah, so people being 100K down, 50K down. Yeah, price running 1,000 pips past the stop. But I mean, I had a trade short with two different brokers. One of them is on your screen right now, and I took a trade with a I took a trade with a 10 pip stop almost, and I wasn't stopped out, right? So it's a good one. In fact, you know what? It was so good. It was so good. I'll show you guys the call. It was a bit nuts. This is probably the nuttiest thing you're gonna see ever. Right, so let's have a look. Just give me a moment, guys. Yeah, I want to find this. Yeah, so um, there was the trade call. There's a short here costing 10 pips, right? And it goes short with a 10 pip stop loss. And I'm just going to click the link so you can see where that short was placed. Right there against the wall, right? 55.37 was when the price, so 10 pips above the wall, that would have had a stop at 55.55, and we weren't stopped out on that. The price just tanked, and tanked and tanked and tanked. A little bit crazy, yeah. Uh, but the best part of it was the timing, right? So that call was at like 9:29, and by 9:31, the expression was holy moly, right? So, G, are you here, mate? Let's have a look. Right, maybe not, but um, yeah, no, happy days. It was it was happy days, right? So that was on the pound Swissy, right? It was quite nuts. It was amazing. Uh, doesn't happen every week. Wish it happened more often. Um, okay, guys. Yeah, I think that is our lot. Yeah. So if there's no questions, we'll call it a day. Thank you very much for attending. I hope you've enjoyed the presentation. Do take the time to check out my website. It's www.wmdforex.com. I publish my charts and trade alerts, trade plans, etc., on that website every week, and it'll be well worth your time following them. So do check it out. And thanks, of course, to the team at FX Street for providing the platform. I will be back here in February, but I am away. So let's have a look. When can I be back here? You know what? In February, I'll probably be doing the 16th. Yeah, probably the 16th of February. I'm away. I'm going to be in Toronto from the 31st until the 4th of February. So usually I do the first week of the month and then the third week of the month. So I'm away that week. I'll be back in February, and we'll catch up again then. In the meantime, have some good trading. Stay smart and stay sharp, as they say. And I'll see you all the next time. Thanks, fellas. Bye.